So let's start off with the subject at hand everybody's talking about. Who's to blame for Tesla stock blowing up and making new lows lately? Is it Elon? Is it Jay Powell? Is it some combination?
Well, I think the company still has really tremendous earnings growth to propel the electric vehicle market into 2025. You know, that company, as well as many other automobile manufacturers, have really kind of taken back the electric car momentum, and by 2025 we're going to see more and more, like millions of these cars being sold a year. So I think that short-term market gyrations is not really a testament to what's going on in manufacturing capacity, demand pull for more electric vehicles, and not just because of the reduced emissions from operating a car and manufacturing that car, but its convenience and its style and it's consumer driven. So this is a market that has taken off.
What's interesting is that if you look at Tesla's relative performance to General Motors, it's at one of its lowest points throughout the last 3 years. So it kind of, by that perspective, it seems like there's something Tesla specific happening here. Maybe Elon's Twitter stuff is to blame. On the other hand, though, I mean, there's other EVs that are down a ton. You got Rivian just, it's like vanishing in front of our eyes, this stock. 180 bucks coming into this year, 18 bucks now. Elon says that a lot of his peers are going to go bust. So is it like Tesla and Tesla alone? How does that shake out to you, that the competitive aspect?
Well, I think there will be some consolidation. Some of the smaller, more innovative companies that are coming out with new models, whether it be trucks or SUVs, are going to have a place in the market. I think some of the incumbent auto manufacturers are also going to have their models out, and the whole market will be lifted. Now, again, like the short-term trading volatility that we've seen over this past 6 months or so is not really a reflection of what's happening in automobile demand and automobile manufacturing and earnings. What could be some headwinds there, of course, is the kind of slowing of demand next year, maybe first half of next year, due to just like economic fears of recession. But employment is we're going to be at full employment, and people are getting back into the office, and people are commuting more, while high rail public transport is probably more economically and ecologically efficient. People are still driving. So we're gonna still see a very robust electric vehicle market across the board.
Your fund, NEXTX, is not just vehicles, of course. Tesla, as I see, yes, is the second biggest holding as of the last filing. Correct me if I'm wrong. That was as of last quarter, so it's been a couple months since.
Yeah.
Jinko Solar, the top holding there. But you've got other companies like in the chip space. Taiwan Semi's in there. IBM is in the mix. But I don't see any of the other vehicles in the top 10. You're beating a pure vehicle fund that I track that's pure EVs, so it's paying off to diversify from the EVs. But you are trailing up more just kind of pure solar fund like a TAN. What's the plan next year, and how will you manage this fund and respond to what's performing and what's not?
Yeah, the sustainability kind of theme overall is inclusive of solar panels and electric vehicles, but it's also about the industrial transformation of major conglomerates, the rise of mid-cap companies who are industrial players supplying equipment and kind of more boring type of industrial manufactured pieces to the entire complex of our economy. So, you know, looking at the next economy, it's really about how our companies, mid-cap, large-cap, also participating in the transformation of our economy to be lower carbon, more equity, more socially equitable, and just more energy and water efficient. Some of the other trends that we're seeing, is food security. So we're also looking a lot at what's happening in commodity markets, especially with the war in Ukraine and how commodity prices have been hit by that, and how companies are responding. So the Sustainable Equity Fund, NEXTX, really is looking across the entire economy, not only at pure play solar panel manufacturers, but also more incumbents in the mid cap and large cap space that are also transforming their business to becoming more in alignment with a low carbon economy. And much of that pressure is not just coming from consumers, it's also coming from large investment complexes, pension funds, and other insurance companies who are demanding more accountability on the part of CEOs.
Right.
And so we pay attention to what those pressures are.
They have net zero goals now. Bridgewater, I believe, just said that they want to be totally net zero at some point. I might be getting that headline wrong, but I'm pretty sure I saw that. Bruce, great to have you back here. Thanks for the update, and we'll check in next year.
Absolutely, Oliver. Happy holidays. Thanks so much to you all. Bye-bye.
Thanks, likewise, yourself.